Welcome to the HC Insider Podcast. I'm Paul Chapman. Today I'm joined by one of the leading thinkers in the commodities sector, Roland Rechtsteiner, Global Head of Oil and Gas, Mining and Chemicals at Oliver Wyman. Roland joins us to talk about energy transition, what it is and what the impacts are on the commodities sector. In this first part, we focus on the commodity traders themselves and what energy transition means for them and the opportunities it provides. In the second part, next week, we look at the producers and also operating models and the impact on talent. Roland, thanks very much for joining us.
Yeah, thanks, Paul, for having me.
You have a unique position in the commodity markets, working with participants all over the world, right across the commodities suite, working with them on their business plans, working with them on anticipating just these kind of big challenges that face the market. Can you perhaps orientate us as to what are the current challenges and themes you see in the commodities sector and why energy transition is perhaps the overriding force facing organizations?
So for many years, we actually see four main challenges in the commodity trading markets, which is, first of all, quest for scale, where it's about increasing volumes, about consolidation in the markets in order to get economies of scale. I think secondly, it's about digitization. Certainly digitization in terms of efficiency in mid and back office, but even more about predictive analytics to support front office decision making through better insights into markets, which has really taken off in the last 2-3 years. Thirdly, it's about customer centricity, which is all about being close to the customer, understanding customers, and offering customers different ways to participate, be that through bulk breaking applications, be that through any type of services, or be it, last but not least, for the traders to participate themselves through different type of participation models in the downstream markets. And fourthly, it's all about cost and operating model. So operating model discussions are extremely important and have shown that there's huge amounts of efficiency and effectiveness gains through streamlining operating models. And that is something which is on everybody's agenda these days. Now, on top of this, we have short-term challenges like COVID-19 that has massively disrupted, obviously, markets. We have geopolitical tensions in a way we didn't have them for quite a long time. And last but not least, we have oversupply in most of commodity markets. And all that together is currently impacting significantly market structures and therefore driving also massively volatility. However, the biggest change is actually the energy transition. While some of the changes I just discussed are rather kind of smaller pieces of change or shorter term issues, when you think about energy transition, it has a massive impact. It's in the long term where a big wave is coming, which will redefine customers. It will redefine products that we will be trading, and it will ultimately redefine business models as well. And that transition is actually offering a lot of opportunities for commodity traders to participate right now, but also in the future.
Could you put some definitions around what energy transition is? What is it a transition to? I'm sure it also means different things to different organizations. Can you help us understand exactly what that term encompasses?
Yeah, absolutely. I will try my best. Obviously, I'm assuming everybody's got a different definition.
Yeah.
But from my perspective, the way we look at it is basically the energy transition is a journey from today's situation to actually a situation where along different elements, markets will look significantly different. And that will encompass, for instance, that certain commodities will be replaced over time. We have seen that already with coal. We see that increasingly with other products, be it fuel oil, be it even gas in certain markets. And we have on the other side, we have new commodities come up. If you think about a lot of the battery components that have taken up quite significantly and are even coming up more. We see this across four different elements. First of all, we see a trend towards higher return carbons, which means on the one side, higher financial returns, but on the other side, also higher sustainability returns. And that is obviously possible because we have the situation where there is obviously more carbon available carbon commodities available that we might actually need. I think secondly, we have a trend from obviously molecules to electrons. You've seen the large majors already announce that they want to become the biggest power firms and power traders in the world. And I think that is a trend that will go on. Thirdly, we will have, during that process, we will have transition fuels. And that means that, for instance, when you look at gas and LNG, which is right now obviously still growing. However, in the long-term energy mix, you could question whether the carbon emissions are too high and therefore will be replaced one day. But over the next 20, 30 years, gas will play a massive role in that energy transition away from oil. So that is another great opportunity. And later on, that might move on to hydrogen and other areas. And fourthly, it's about the renewables in general. So be that solar, be that wind, be that biofuels, etc. We see a massive surge of that, and that will basically even accelerate itself going forward, which will then ultimately over the next 30, 40, 50 years significantly support the transition from a carbon energy dominated world to a less or even carbon free world.
From what you're saying, it is also going to affect all of the commodity, I guess, value chains, whether that's metals, energy, or ags. You've got each one of those is going to have some impact from energy transition, which just sounds wholesale. It's such an enormous change from the state we are, at least now. Are we just getting started? Are we already, way into this? What's sort of can you orientate us as towards timelines and what this period of transition will be?
A few years ago, the whole discussion around energy transition was still about, will it really happen? Will companies be serious about it? Or is it more kind of a bit of a greenwashing happening or a discussion happening? But today we can clearly see that trend, or that train left the station, and it's definitely going to happen. And it's already happening. As I said earlier, you look at coal is being replaced in most parts of the world already today. And you know that we have certainly way more coal production than demand probably over the next years. I think on top of this, you when you think about the different sectors, I think it's quite interesting because it obviously the whole discussion starts about energy, because obviously one of the largest carbon producer, and you have the discussion, from fuel oil to LNG, or in general from oil to gas products. But when you go into other markets, for instance, into mining and metals, the energy transition started there already quite some time ago. Again, coming back to coal, but then the whole discussion around, iron ore or steel production technologies. Think about the mining of all type of ingredients for battery components, which created new markets. And when you think in agricultural, there's a big debate around emissions from meat production. There's a big debate around palm oil and a lot of other commodities. So it's really affecting that type of transition, which is not only an energy transition, it's really kind of a focus on sustainability going forward, which is kind of driving all type of commodities.
Yeah. I mean, we're seeing it everywhere, working with clients, working on plant-based protein, as you mentioned, but also, rare earths into batteries, which I guess provides, two things. Firstly, this isn't something the other commodities can ignore. This isn't just an energy-only trend, but also it's one of opportunity for everyone. As with all of these trends, you've got accelerators and decelerators. What things are out there are driving this change? Is this government led? Is this people? Is this populace led? What's accelerating this energy transition right now?
So I think the key driver for the energy transition, I think for the first movers, was really around purely the business opportunity. So when you're selling energy ingredients or energy commodities to a customer, and you're realizing that the market is basically being replaced by other commodities, that is when you start thinking about, should I move from supplying coal to also supplying LNG as an example. On the other side, there were quite a lot of opportunities around in the renewables markets for sure. as well as in other markets. You had for sure on the power side, you had a lot already over the last 10 years happening with wind farms, etc., specifically in Europe. But in general, there's a business opportunity there that was driving over the last years the development there. And the same with rare earths for battery, as you mentioned before, Paul. I think what you then saw happening over the last few years was actually an additional pressure coming in from, not necessarily from regulators only, but from society. So on the one side, you had increasingly the largest funds in the world saying they will no more invest in carbon-heavy industries. And that is obviously big pressure on the industry because that has implications on funding, but also has implications on, in the end, on stock price, given reduced available capital into these markets. So that started a significant pressure. And then secondly, you had the debt holders increasingly arguing against carbon intensive industries. And if you think about shareholders and debt holders, so both equity and debt becoming more difficult to obtain, you start thinking about, how you deal with your business. And specifically in businesses, when you are in physical assets where it takes a long time to actually move such a tanker, then it becomes something you got to take very quickly serious. But what I found really interesting is also that I think over the last few years, you had additional societal pressure coming in actually from the inside. So on the one side, employees are asking, specifically the younger generation with all rights, asking increasingly around how can we get the business model cleaner? How can we avoid more pollution? And that is having a significant impact on businesses because in the end, all businesses need to get the best talent to be competitive. And an interesting one is what I saw as well, Paul, is that quite a few of my clients, which are family-owned businesses, my clients would tell me that their kids, which are maybe young teenagers, are suddenly asking them questions around why they have a business that is polluting Mother Earth. And I think those are all drivers that significantly change things. And then obviously you've got increasingly regulation coming in. Obviously there's ESG conversations, there's any kind of other regulations, obviously, and that's all driving, I think, in the end, change now and accelerating it massively.
So the producer scale, you've got these huge projects which require 10, 20-year levels of return, and you've got a investor community that's increasingly worried about these issues and actually the underlying value of the assets. That was a trend pre-COVID. COVID strikes, and it seems like the whole thing has been accelerated in terms of the capital market's willingness to support organizations that aren't embracing energy transition.
We've all seen that over the last few weeks with all the reports that were coming out from different investors or banks around kind of how they want or don't want to support carbon intensive industries going forward. I think this is all certainly also driven by the heightened sensitivity. I think that we all developed a bit over the last few months around our surroundings, given by what we went through and parts of the world are still going through. But I think in different parts of the world, COVID also has a different implication because, like in Europe and certainly even in North America, in listed companies, those who actually feel the pressure from the investors. But when you think about other parts of the world, and here I'm thinking about countries like India or Indonesia, there's a big questions around where they will invest over the next years in terms of energy or in terms of any type of commodity plays. And that is specifically driven that if you look at the employment return that you get on every dollar spent on carbon, it's much higher than when you spend it on renewables. And obviously it's all about creating employment now, also in some of these regions, or actually utilizing resources that are in the country. And therefore, there's certainly currently debate ongoing that could lead to a slowdown of some of the energy transition in parts of the world. But for sure, in Europe, definitely, and probably also in North America, we will see an acceleration through the different factors.
On the developing world side, one of the things that's, I guess, fascinating me is that actually some of these technologies are so much more simple than obviously building a large refinery. There's the thing that sticks with me always is that there's no moving parts in solar. And much like cell phone technology, you might actually again see this acceleration of kind of just leapfrogging perhaps the more traditional progression that Western economies have made through the transition year to date.
I think solar is a very good example. When you look at solar stocks, how these developed over the last 9 months, it's amazing. They had only a very small shock from COVID, and now they outperform pretty much every other asset class. And this has been quite impressive. It's quite impressive, and of course, and that is of course driven by the fact that obviously a lot of the future investment also needs to go into these areas, and specifically you can build it much quicker, and as you say, it's much less complex because in the end you can buy it in a turnkey stage and then just operate it. And I think that's kind of something that we will see significantly. I think one key for that also, Paul, is I think when you think about the stimulus packages around the world right now that are being constructed, specifically take Europe as an example, because I think it's really an extreme example. I mean, all the financial support that goes into any of the industry sectors is somehow linked to sustainability objectives. Whether this is aviation, whether this is automotive, everywhere. And I think that is further even accelerating, investments into these type of technologies, because obviously they can much better benefit from all kind of financial support as well, because obviously it's absolutely carbon zero.
Stepping back, you've got this process, if I understand right, effectively started because of customer demands that businesses have been meeting. You've got, I guess, an acceleration going on, supported by government regulation, stimulus, in part as well caused by COVID. That might have some different imbalances around the world, but it feels like this is, an ever increasing trend that, as you say, the question is not if, it's now when, and we're probably actually, a good way already into it. And it's really just a matter of time and how organizations will then respond to it. If we break down the commodities sector, I know this is very simplistic, but into essentially producers, consumers, and then the merchants, the trading merchants. So just looking at the trading community, which I know you work with around the world, has been a major focus of you and your teams over the last few years. How are they impacted, and what are the opportunities that they have? As you talk about this move to higher return carbons, the transition from molecules to electrons, this whole passageway of transition fuels, not to labor the question, but it's fascinating in that this is one of those events where we kind of know the answer, we know the outcome. It's just we don't know how long it's going to take to get there and exactly by what path it will take to get there.
So, well, uncertainty drives volatility, and that is supporting market structures that are positive for traders. If you, for instance, look at the market developments in the commodity trading markets from 2018 to 19, we had around a 20% increase of global gross margin across all commodities in the commodity trading space. And that was predominantly driven by oil, LNG, and power and gas Europe. In 2020, even across these markets, we already see pretty positive developments in the first half of the year as well. And so in general, I think all change will drive volatility, and that is something where traders can participate. I think secondly, what's always important to remember, traders in general have less of an asset base. Of course, all the large traders today own assets along the value chain, but compared to the volume they trade, it's still much less than what a oil major or a mining company would have. And therefore, for them, it is much easier to switch and to move forward. And most importantly, as they see themselves as the intermediary, as the logistics provider, they actually operate in the markets where there's demand. So when you think about, look at the oil traders over the last years, all of them actually did build up LNG businesses, are now building up pipe gas businesses, are building up power trading businesses, because that is actually basically the natural evolution of this business. And it is easier for them just to participate in these markets because traders can use the understanding and the platform of these markets to participate in. When you then think about the next step it's also that it's always about the portfolio of the assets. So it's not only about moving from one commodity to another commodity along the energy transition, because there's always demand also for, I would say, products that will have a decreasing demand going forward. But you can still continue to participate in those. And I think there's good opportunities there, because there's even good opportunities right now to pick up assets. If you think about some of the latest deals that we have seen where upstream assets went, changed owner for maybe 15% of the original price they had a few years ago. So I think there's a lot of opportunity out there if you want to pick up either distressed assets or assets in areas where players don't want to participate. And then on the other side, you can also, obviously, as a trader, very well participate in these new markets and help kind of create these markets. So we have a lot of markets out there, commodities that have been really illiquid, pure B2B marketing commodities that became increasingly semi-liquid over the last years. And you see first derivative markets that give you opportunities to participate in these markets, not only physically, but also financially, to offer risk management products to your customers, to be actually able to shape and develop markets. Think about what happened to the iron ore market. Think about kind of the steel market now, the biodiesel ingredients, the secondary markets for battery, and so on. So there's quite a lot of opportunities out there. And I think this is actually something where this change is creating massive opportunity to trade in existing markets, but to actually also move into new opportunities.
I guess a number of comments there. One would be just going back to the talent, which is obviously the key to any trading house. They are also going to have to reposition somewhat as they go on that journey to become more attractive to younger generations, to the latest graduates, pointing out their green credentials, if you'd like.
Absolutely. I think it's multiple effects which are important for talent strategies for commodity traders these days. I think one is exactly as you say, Paul, it's to have a story around the energy transition, how you participate in it, and offer opportunities for young talent to participate in it. Because there's a genuine demand by very intelligent and capable young people to actually participate in that energy transition, in participating in sustainability developments. I think another element is actually also around the capability and who you're competing with, because increasingly you need data scientists, you need very, very quantitative analytical capabilities, including being able to code machine learning algorithms and so on. And that is something that the future traders will have to bring to a certain extent. And for that talent pool, you're actually competing not only with your normal peers and some of the other participants, but you're actually competing here with the Googles and the Amazons of this world.
Well, with every organization, right? Everyone is going through the same digitization transition, and that talent has their pick of which type of organization they want to work with.
No, exactly. And I think, and I truly believe there's a very good story there for commodity trading organizations. But I think it's very important to actually understand exactly what this kind of talent pool is really looking for, and then creating the opportunity and creating the atmosphere for them to strive in this.
The other interesting trend, I guess, that we've seen at the margin so far is also kind of a trend to brand commodities in terms of their origin. So kind of essentially fair trade coffee type scenario, but with whether it's cobalt or whether it's with grains. There is an opportunity there as well, it seems or feels, for if you have a more discriminating customer, they are going to start thinking about the origin of their rare earth metal or whichever commodity it might be. Is that a trend trading houses could capture as well?
To a certain extent. And, in Switzerland, we've been for many years blessed with a large amount of non-profit organizations that are supporting a conversation around how can, for instance, the whole commodity sector be more sustainable. And I think whilst certainly, sometimes the demands might be quite extreme and maybe not practical in business life. On the other side, and they also see that. They see it that there's areas where, when if you participate in certain spot markets and so on, that it's going to be difficult to kind of control the value chain. But for sure, we will see increasingly also kind of that demand from the customer, and you have it already today in certain areas. And we'll see that also going forward, and that will certainly then probably drive kind of at least kind of two streams, if not kind of change the entire activity set. But I have to say, I think transparency today, specifically with the large players, is already very high, and therefore I think that journey is well underway.
So you've got actually they're relatively well positioned. They're obviously familiar with seeking down opportunity. They are at the forefront of creating markets for these new commodities that come online as a result of energy transition. They're certainly more nimble in terms of switching. And I think we'll come on to it in terms of operating model. There's more and more for these organizations to take advantage on, from lowering their costs, changing how they're operating to primarily reduce, I guess, the number of individuals needed to do it. Before we move on from them, actually the last decade has been characterized by trading houses building pretty significant asset platforms, the kind of the mini major type setup. Will those be significant anchors to the established large trading houses? Will the smaller, newer, less physical organizations be better positioned?
So my personal view is it depends a little bit on the business model, but in general, the physical access is very important because, as we discussed earlier, Paul, the energy transition is not happening from today to tomorrow. And in the end, understanding the flows, being able to not only have proprietary information, but also have proprietary flows, I think it's going to be really important. It's going to continue to be important. If you just participate in financial markets or just through, short-term contracts or maybe even long-term contracts, it will be difficult in any commodity to really be successful. And you always have to ask yourself, what is basically your differentiator in that market? Why would you win? Why would you be smarter at the table than somebody else? On the flip side, what you certainly see is if you understand certain markets well, you can start building a trading platform where you basically use the knowledge into certain markets, but then have a purely analytical trading activity going on. And these kind of, spread books or quant trading books is something that we see across a large amount of traders, increasingly yielding very, very, very stable and significant gross margin to the overall business. So in the end, I think it's a bit of both, and it depends very much on on what is the play you want to do in the market. But certainly the large gross margin plays, from my perspective, will always require a certain asset activity.
Oh, and we're definitely seeing that melding, and have discussed before on the podcast, that melding of quantitative with the experienced fundamentals trader, really being quite a powerhouse, at least more recently in terms of performance. So I guess in summary, the same model will apply, which is how can you gain access to proprietary information? How can you control flows? As that's where the margin is, and that will still necessitate those assets. And I guess in some ways, as you say, this is also not an overnight thing. This is over the next decade, and there's still plenty of opportunity. I think, as you alluded to, as the old markets go through increased volatility, but will still require serving to make money there as well. So this isn't sort of abandoning the old. This is adding on the new. I guess there's just a bit of interest. What do you think are going to be the surprising new commodities of the next decade? Are there any sort of, I don't know whether it's hydrogen or whatever it might be? What are your top one or three commodities you think that we're going to be talking a lot more about in a decade compared to what we are today?
Yeah, I think it's a good question, Paul. I mean, you answered it partially. I think hydrogen for sure is going to have a significant impact. In the studies that we did to understand hydrogen better in the markets, you can certainly see that probably starting towards 2030, there's going to be significant value pools in there in different business models, and therefore we certainly believe that that's going to be quite a significant market. Specifically, if you think about blue hydrogen or green hydrogen, or now even the discussion is about turquoise hydrogen. So I think there's quite a lot of opportunity in that market. I think we will also see increasingly, I think, secondary markets becoming more important. So the whole topic of circular economy, we believe, is going to have a much more important role going forward. That is certainly something which has to be still better understood. And I think that can be in different parts, whether this is around steel, whether it's around plastics, different parts can certainly play quite a major role. And then I believe that we will still see for a significant time huge opportunities still in LNG. That market still has I think a long way to go, because it actually helps a lot to also develop regions where you have less of an opportunity with no commodities around. And then I think the last point I would make is, and again, we discussed about it before, all the metals that are required to support the energy transition. I think those we will see quite significantly grow in the foreseeable future.
Mm. And it's been, we've discussed it before on this show, the LNG, I find it fascinating as being a driver of unbundling, of commoditization in the developing world, as it plays a major role as being a transition fuel. So I guess what I'd like to do is leave it there and return in the second part to, I guess, carry on the discussion and focus in again on the energy producers and the impact on them, and then carry on with, I think, what is also a huge topic is the sort of challenge and change to operating models, and then also tie in talent as well. But really appreciate your time, Roland. It's been a fascinating discussion so far, and really look forward to returning in part 2.
Yeah, thanks very much, Paul, and I look very much forward to continue the dialogue.
Thank you for listening to the HC Insider podcast. To find out more about HC, go to hcinsider.global, where there's more news and content focused on the commodities markets.